Thank you so much, Nick, for also being the one bringing all of us here together. It's been a pleasure working with the both of you on bringing ACRED to Solana for the first time.
Absolutely.
So today is actually a very historic moment. Today is the day that Apollo's flagship credit fund is now live and tokenized on Solana via securitize. So it's the first time ever that an asset like private credit has been publicly available on a permissionless blockchain. And we're also very excited, as the founder of Drift, to announce that we have launched a leverage strategy that boosts private credit yield from 9% to up to 17%. So let's dig into that. Reid, tell me about the process of what ACRED looks like, why are you so excited by it, and how can users get in touch with it?
Sure. So Securitize is the issuer of ACRED. You can visit securitize.io to get signed up. Finish some KYC, make your investment, and you've got access to the tokenized version of Apollo's flagship credit fund. I think what's really exciting about having that asset on-chain is crypto people have really had to deal with interest rates on-chain being super volatile and only really being a function of kind of supply and demand in isolated markets for stablecoins. So Christine's fund is an expert in investing and generating a sustainable yield that has nothing to do with any dynamic on-chain. And what that means is you get a reliable, low volatility yield that can be relied on. So you're not trying to constantly move your assets to chase where there's a yield. And that's an asset that with Drift's help, we're able to unlock in DeFi, and crypto is able to build on top of that asset.
Very cool. Thank you so much, Reid. And very silly of me to forget introductions, but Christine, would you mind kicking us off with an introduction about yourself and what Apollo does? And then we'll kick it off to Reid after.
Yeah, sure. Really excited to be here. This is actually my first major Solana event, and I love the energy, and I'm so energized to be part of this ecosystem now. So I'm Christine Moy. I'm a partner at Apollo, looking after digital assets, data, and AI strategy. From a background perspective, I've spent over a decade focused on the tokenization of real-world assets. Previous to Apollo, I built and led JP Morgan's blockchain program. So if you've heard anything about JP Morgan tokenizing $2 trillion of treasuries and US dollars on a permissioned Ethereum blockchain, basically led that program. Apollo is a $750 billion asset manager with businesses in equities, credit, real estate, and retirement services. And at the core, Apollo is in the business of generating excess spread per unit of risk. What this means is we're in the business of generating alpha. Alpha that is differentiated from what is broadly available in the public markets. Now, we're able to generate this alpha in a couple different ways. Like the most differentiated way is that we actually have a diversified number of companies that we've either bought, invested in, or incubated that actually create credit spread. So when Reid talks about the yield, the sustainable and scalable yield, and by the way, when I'm talking about scalable, we're a $750 billion asset manager. 550 billion of that is yield, is like credit, essentially. We have this proprietary credit engine that creates all different types of credit, like aviation leases for airline companies, fleet leasing if you're need to get a bunch of Amazon delivery trucks around, lending to mid-cap companies and also large cap companies. You may have seen, for example, Apollo lent $11 billion to Intel to build AI chips in the past year. But also ranging to if you want financing on building a hot tub in your house. So the whole range, that's how we get differentiated yield that is sustainable and scalable. The other thing that's really important is that at Apollo, the way that we invest, we are fully aligned with our investors. So what that means is that for every asset that is in any of our Apollo funds, Apollo is actually invested with our own balance sheet. So for example, the fund that one of the funds that we're talking about here, like we've indicated that 90% of what's in that fund, Apollo has invested in through our own balance sheet. And whilst we can't guarantee returns, we can certainly guarantee we don't like losing money and we definitely like making it. And so, basically you will be aligned alongside Apollo. So that's a little bit about myself, my background, why this moment is so important. For those of you that I see you in the crowd, you've known me for over a decade, you know that my mission has been how do we get real world assets on chain? That was the first thing. And then how do we actually use the amazing innovation that all of you are building through DeFi to unlock these assets. And so that's why I'm super excited about what's happening today that's live.
Incredible. And Reid, tell us a little bit about yourself and what Securitize has been doing to help push this mission of RWAs in crypto forward.
Sure. So I've been at Securitize for about 2.5 years. I sit outside of the regulated footprint that issues the tokenized securities. And we are focused on building products and solutions that allow those securities to interact with DeFi in the permissionless way it works today. And I think what's exciting about having these great quality assets on chain is also sort of is a counter, is that they're permissioned, right? And one of the great things that happens in DeFi is the speed with which you get to experiment and iterate. In TradFi, for instance, Christine's fund, you can't really get it levered. You can't really walk around with your shares and try to ask someone to lend against it because it's illiquid, it's private, and it's generally not sufficiently interesting enough in the size you would want for a bank to advance you against it. But guess what? You take the tokenized version of that, you use our technology of S-token vaults on Drift, and now you've got an asset that really anyone can experiment at the speed of crypto, right? And it doesn't require a massive balance sheet. It doesn't require some credit committee. You can just go and test things out. So that's what we've been, and also why I'm between both of these ladies is we're working together and experimenting on deploying this on Drift, where like Cindy said earlier on, natively it yields about 9%. Through Drift's technology and their platform, our target will get this up to about 17%. And that's sourced from permissionless liquidity on chain through regulatory through approved regulatory avenues. And like everyone has said, it's available today.
Yeah, and if I might add, I think it's super interesting what you touched on, which is that when you have a DeFi engine, it actually doesn't matter if you're transacting hundreds of millions of dollars, tens of millions of dollars, single millions of dollars, or just $50,000, which is the minimum. Right, like the technology is built and it's scaling, right? So like I think this is like a really fascinating thing, especially for those of you in the audience that have been in traditional finance and the cost basis of legacy systems and teams that have to support the businesses that exist today. And so, I think we've moved away from blockchain for operational efficiency. That is certainly not the lead. The lead is around product innovation, meeting the next generation of crypto native investors like you. That's the main focus. But it's table stakes that it comes with a killer cost basis of near zero for incremental business growth. And so when you think about and I think about it because I'll always be on the side of TradFi. I love you guys, but I feel like I have my place and this is my mission. But if you think about a TradFi institution that has that cost base, over time, as more assets move onto chain, as more assets are driven by DeFi, like Drift, who's going to win? If you can scale to millions and hundreds of millions, without having the same number of operational team members and processes, without the same kind of engineering cost of any incremental feature, like what's that really going to look like? And so, I'm skirting the edge. Save me when the time is end. But for now, like I'm doing my part to help lead traditional institutions to the water.
Absolutely. And that is exactly the vision of early Solana. That is the vision of why we built a capital efficient DeFi platform, because we believe that all assets are eventually going to be used on the most capital efficient and programmable chain where they can actually coexist next to each other. We're just seeing the start of this now with a single private credit looping strategy. From DeFi terms, it's actually a very simple LST looping strategies, right? Like, how many of you guys in the room loop your SOL LSTs in DeFi? I'm sure a lot of you are familiar with this strategy. Now imagine doing this with private credit. Imagine using your SOL LST to borrow stablecoins and invest into Christine's incredible private credit strategies. And that actually offers a differentiated source of yield that matches your crypto portfolio and gives you a fully diversified portfolio that doesn't only rely on crypto native yields. So ultimately, that's the big vision of what we're shooting for here. But Reid, on your side, I want to know why is now the right time for us to be doing this? You've been working on this problem for a long time. What has been some major unlocks, especially on the permissionless side, that has allowed this token to be actually freely floating in a permissionless chain?
Yeah. So, I mean, we've talked about the institutions are here. We've talked about kind of the sustainability of the yield, the capital efficiency of that. But also, like, yes, the yield is great as an equity investor in the fund. But also, if you think about these assets are better quality assets for crypto to lend against. And so it really is beneficial on both sides. As I talked about before, one of the friction points with bringing securities on chain is that they're permissioned. And yes, there is a KYC, and yes, there is an onboarding process. But otherwise, within that kind of white list of users, those assets can move around. Unfortunately, with US securities, there's also investor qualifications and some other friction elements. And so one of the things that we've built at Securitize is really this S-token vaulting technology. And it allows this asset to compliantly exist. You retain ownership of it, but we're able to mint you what we call an S-token. So in this case, it's sacred. It's supported on Drift. And that S-token really functions as a way to demonstrate to a lending platform that security is locked away. It can't be touched by the owner of the asset, but it's there as a collateral stand-in. And that's been able to, as we say, unlock and kind of allow this asset to get better exposure across DeFi platforms. And that's really what our focus is. We don't think everything needs to be tokenized, but we want to tokenize things if there's a way that we can add incremental utility or increase yield, and that there's value really for it to exist and be used in a tokenized form.
Amazing, thank you. And Christine, you recently entered the DeFi rabbit hole. I would say like 6 months ago now, after a decade of working in this space. What has it been like working with Solana leaders, DeFi leaders, in a world where everything is open sourced and people can kind of like integrate ACRED on their own? What has that experience been like for you?
Yeah, well, I can say that it's moving really fast. I'm getting my hair blown back by everybody over here. I think if you look back in like the decade that I've been working in the space, I always said that crypto and DeFi would have the ingredients to enable the fastest, most effective innovation. Because if you think about it, like if you're at a traditional financial firm, innovation looks like one team, like one set of people with one set of ideas, taking a few months to write requirements and then figuring out how to socialize it and prioritize it. And then it takes another year to build it, right? So that's like a really long spectrum. And then on top of that, it's actually unclear whether or not there's even market demand, right? Like you haven't even been able to get the feedback loop because you haven't built it and it hasn't been kind of there. Now, in crypto and DeFi, it's turned around on its head a little bit. It's a little bit scary, but it's effective in that you have multiple teams that have independent thought, a diversity of experience and background, all trying to work together on the same operating system, right? Like we're all operating on the Solana ecosystem right here. And like that exchange of ideas, that ability to just do things really accelerates progress. And then here's the other thing, like as you just do things, as you build like smart contract applications and you launch them with real money, like that's like literally like, that is the best testing that you can ever have. I mean, of course, there's like a lot of UAT testing like that goes in before you launch, right? And that's what we would hope for in audits. But there's no better way to get to the bottom of, does this thing work? And do people actually want this? Than to actually just put it out there in the world. And that's the really powerful thing about the Solana ecosystem, like the fact that there is such a strong network and you know, of builders, of investors, of everyone in between, of different backgrounds, that we can just do things. We can just put it out there and see, like, you know, how is the future of finance going to roll out? We don't need to guess. We don't need to hypothesize. We don't need to write thought leadership papers about it. We can just do it, and then we can iterate and adjust. That's sick.
Incredible.
I'm here for it.
We all have such high agency in the Solana ecosystem that things just happen. And you know, very excited to again say that this product is now live, and you can just deposit in it. You can just have risk managers like Gauntlet manage the risk on behalf of you in this leverage strategy. So just to say again, ACRED is now live on Solana. And if anyone has any questions about it, feel free to look out for us after this. But before we end this, I want to do a very quick lightning round of questions. Where do you guys see DeFi TVL in the next 5 years? Reid, let's start with you.
In the next 5 years? Oh,
let's say 5 and then 50.
Okay, well, so what?
Yeah.
33 trillion of equities. 5 years, I think, let's say 15 trillion.
Wow, it's amazing. 15 trillion.
I mean, for my part, like I'm not measuring in TVL. Like as many of you know, I've mentioned in the past, my mission is to democratize access to excess spread per unit of risk to this alpha, right? Historically the domain of large sovereigns and institutions and retirement systems. I want to make sure you have access to that. Why? Because Apollo is in the business of building better retirements. Y'all are really young right now, so you're like, retirement, like, wah, like, let me look at my phone. I don't really care about what you're talking about. But like, in reality, what are we all here for? Why do we invest? Why do we build? Why do we work? We do this so that we can build the livelihood for ourselves, for our families, for the generations to come. And so, whereas Apollo has the expertise to take your hard work earnings and multiply that with the excess spread that we can generate, being able to provide broader access of that to you in the way that you want it, and it sounds like y'all want it on the blockchain, and over time, especially as we get to the advancements of AI, making that even more customized to your everyday like liquidity needs, like all of your savings goals. Like basically, we have the opportunity to create customized, like personalized portfolios that help you have a better life with you and your family off of your hard work earnings. So that's what I'm here for. So TVL, like I'm here for it, let's do it. But in reality, if like in 5 years you all can not retire better, although that'd be sick. Like if we could like leverage this to the point that you're all retiring like in your early 30s, that's a win from my perspective. That's what I'm working towards.
Yeah, we're all here to make it together. And there has never been a better time in history for DeFi and TradFi to converge in such an optimistic way. Macro tailwinds are here, regulatory all-wins are here, and we're really here to see TradFi converge into an on-chain DeFi institution. And all of that is going to happen on Solana. So thank you very much for joining us today. This was amazing.
Thank you.